50% of stocks nearly under their, over 60% were under their 50-day moving average for one, and nearly 50% were under their 200-day, and the market was at its all-time high. So the what was going on beneath the surface was still a bit, looking a bit shaky. But I think there could be a stage of derating where everyone's like, we're really putting in a lot of heat into all these valuations, and the bottlenecks with energy, and there's bad news to come, things not being able to get up and running as quickly as they want.
Good thing to highlight for people, because this could become...
It could jump out at us pretty quickly if markets continue selling off.
G'day folks, welcome to another Closing Bell with me, Charlie Orman for Fat Tail Investment Research, and I'm joined by Murray Dawes. G'day Murray, Chief Trader here.
How you doing, Charlie?
Very well.
Hello everyone.
Hello everyone. We'll be covering what has been another tumultuous week on the markets. There's been big moves within the ASX, which Murray predicted.
Funnily enough.
Something you may have predicted before.
Where's my crystal ball? Where is it?
Also big moves on the US stocks, so we'll have a look at some of the US big names. Also some movements within the bond markets we want to look at, something a little bit different there for you. And just generally just talking about the chaos that's been going on. I mean, maybe we start with Nvidia. That has been the big news of this week, with markets in kind of a panic mode about valuations. What do you think? What happened?
Well, look, it was a great result, and I think Nvidia, it sort of makes sense that they're still making heaps of money. I mean, everyone's still investing massively, so it's not like Nvidia's really the canary in the coal mine sort of thing. They are the central pillar of everything. All the money's flowing to them, and all the overinvestment. If there is massive overinvestment happening, they're still spending that overinvested capital on
Nvidia's chips.
So they're seeing their returns being good. Doesn't really tell me that we're not on the cusp of some crash.
Right.
I'd rather be looking at Blue Owl or Meta and Oracle to be looking for the cracks appearing, and just that investors are a bit nervous.
Okay.
But the fact that it did open high and sell off over the day is that, and really the whole market, I think that was a really good sign for me that we probably are going to see more selling pressure, is that often the big players, when they do want to start offloading, they like to do it on a strong day. They like to do it on a day that opens up and strong, because then imagine you then sell slowly over the whole day, and you've got buyers who are there still buying, think, oh, this is a good day, I can keep buying.
Fair.
There's no fear. But if you're selling into a market that's collapsing, everyone's chasing, trying to hit the bid, and you can't get much volume out.
So shall I give some numbers for the readers? So the quarterly earnings for Nvidia was $57 billion, right? 51 billion of that was just data centers. That's a huge amount for just a quarter. That's absolutely massive. Up 25% from the last quarter, up 66% year over year. So these are huge numbers. Margins went from low 60s back to where it was before, in the low 70s. So things were looking great on that. All great.
Of course it looks great. Yeah.
After hours, I remember looking at it yesterday, the thing was up 4.5% Nvidia, and then it closed with an intraday movement of 8%. It closed way down, right? It closed down 4%, something like that.
Yeah. So there's a bit of a de-risking going on, and we've seen it started already. As we've been saying about Meta and Oracle, and now Blue Owl, I'm watching because they're a massive financier of all the AI data centers, et cetera, et cetera. So there's been some cracks appearing already, and we know that the breadth of the market's been pretty weak. I've been saying that for the last 3-4 weeks.
We have warned about this moment
saying that the 50% of stocks nearly under their, over 60% were under their 50-day moving average for one, and nearly 50% were under their 200-day. And the market was at its all-time high. So what was going on beneath the surface was still a bit, looking a bit shaky, and so it was all ready to sort of fall over. And so I don't think it's necessarily a statement that Nvidia's the result was bad or good, or I just think we're sort of at a point where people are a bit worried, and there's just a bit of profit taking sort of going on, and it's a good opportunity on a big up day on the day, buy the rumor, sell the fact sort of thing.
Yeah, sentiment reset. Everyone kind of sells down for the next leg. Should we look at the Nvidia chart and then we can move on to something that's a bit more risky?
Yeah, so I mean, it's basically still looking amazing, right? But are we just? This is a weekly chart, by the way, and are we just in for something like that. That's all I'm waiting for, and you know, huge, incredible uptrend. So we've just been watching this, and the last few weeks I've sort of said, you know, there's your high there, there's your weekly sell pivot. So from there, I'm then watching it going, well, how is it behaving once that happens? And often I wait for, you know, I can't go into too much, but buying pressure into that where I expect there to be selling pressure. So, and it's how it behaves then that really is the tell.
Right. And is the blue line there this 200-day?
No, that's just the 20-week moving average. So this is weekly. So 10-week exponential, 20-week simple.
Right. So it's landing right on that.
So it's getting close, yeah. So it's right there. But for me, it's looking like it's going to go through. Like that weekly trend is probably pretty close to turning down. Last time we had a weekly downtrend was there. And then all the way, you know, it's all the way back, never. So the weekly trend shift, you know, was a bit of a sign there to watch out. So the momentum's looking like, I'd say there's going to be more follow through to come. But, you know, that from a bullish point of view, I'd just be looking at this most recent wave and saying, you know, where do I want to pick this up? So, you know, it's still way at the top. So you might just see it's so strong, just a move back to the point of control, which is also retesting that old high. So if it's strong, it'll do that, get back there and then take off again. And if we're seeing a bigger correction come, it'll go down to the buy zone. And, you know, that might be just a beautiful buy signal out of there.
Right.
Even if further it'll be worse.
So traders should prick up the ears if they see Nvidia around 150. And then if we see something sub 125, then you're looking at the buy zone.
Yeah, in the buy zone, it could get down there. But big picture, it's still looking pretty awesome. You know, but I do think there's going to be a bit more downside to come in the immediate future because last night was a big tell. Market opening up really strong. Oh, it's all on again, Santa rally, and then the big sellers come in and just sell steadily over the day. And the range on the day was actually, 200 and something points on the S&P.
8% intraday move.
Oh, right? That's the Nvidia, but I mean the whole market.
Oh, right, yes.
So in the whole market, there's like 200 and something. So it's a bit sneaky. It says, the S&P was down 100, but actually it opened up 100 and then sold off 200 points over the day, closed on its lows. So for me, looking at, if we just go to the next one, control tab.
Yeah, that's the one.
There we go. And so I was looking at the S&P, right? And I was saying, look, it's still strong, but watch out because we did have that weekly sell pivot. And this is a good education for people who maybe haven't been following for long. You know, I'm just watching, saying, okay, it's a good, strong trend. Everything's fine. And it's almost like things go in steps. You have the first things, the sell pivot. And that's lower probability of success because if it's trending up, it may not work. And then you're looking at the trend actual shifting, so the weekly trend going down. So it's like you need one thing happens, okay, that's a warning sign. Then you need the next thing is like, okay, the odds are going up that we're actually going to see a lot more weakness. So we got the first step, which was that weekly sell pivot. It rallied and found resistance where I expect to see it. And then I was saying, okay, well, this next leg's what we've got to worry about. And here it's done it, where it's gone, okay, it's cracked through the 10-week moving average. It's now resting on that 20-week moving average. So this is where it's that decision time. If we look back here, you know, are we at a point where it's going to find the buying pressure again? And even then it could still end up falling over. Like here you go, cracking through the 20-week moving average, weekly trend going down. That's when things really collapse. So we're still in early days, but this is that first sign since the April rally began and that weekly trend, which has been beautiful. It's now under question, isn't it?
Yeah,
so we're seeing a shift.
If we look at that February period, that was very much based on geopolitics, right? It was like whether or not they can sell chips to China, what's happening with the tariffs. Like there was a lot of questions there that were not related to valuations within AI. So it is a bit different in terms of the sentiment shift from here to now. But,
you know, let's even just have a quick look while we're here at this Blue Owl Capital.
You're writing about this today. So tell us about it.
Yeah. So these guys are massive financial, like billions and billions of these AI data centers, doing deals with Qatar, their sovereign fund, doing deals with Meta, where they will basically build the data centers and then Meta will lease it off them so that Meta doesn't have to have the massive capital outlay. And then they're off selling bonds and putting some of their capital in and selling off bonds and getting huge amounts of money to actually pay for things to get done. I mean, they're getting very stretched now, and they've gone all in. So if there's anything that's a bit of a canary in the coal mine about fears about private credit, because remember, there's the hyperscalers, they're funding it out of their cash. They're also selling a few bonds themselves. There's all these private credit. Then they're taking up the slack, like 800 billion of slack of the trillions that's expected to be needed. So if that starts to wobble, that's sort of the weakest link in it, really, isn't it? Is that private credit that's doing the final bulk of the huge amount that's needed.
And it's so opaque as well.
And so opaque, and also when the music stops, it can go to shit pretty quick.
Yeah.
So
what did Warren Buffett say? That the tide's never gone out on private credit, right? So we have yet to see where the people are swimming,
what actually happens,
who's swimming
how
naked,
really overstretched and shooting for those higher yields, what risk they're actually taking on. So this is just looking a little bit worrisome, isn't it? It's broken through that low. It's big volume actually went through. So look, it could end up being a bit of a clear out, and then we see it turn up. Look, that might very well be the case. But just big picture, if you're looking at Nvidia and you're saying, oh, it looks fine, this is sort of a bit closer to the riskier plumbing of what's actually going on.
The capital flows.
And investors are starting to say, we might there might be a bit more risk going on here than people realise. And same with Oracle. We were saying, look, it's actually looking like it could break down through here and look pretty bad. That looks pretty bad to me, right? That looks like something that's actually going to do this.
Yeah. Yeah, it's certainly the most dangerous. But as we talked about in previous weeks, unlike other large hyperscalers that are usually funding their operations and their expansion of these data centers through cash flows, they are up to their gills in debt, right? They have a 500% debt to equity ratio. So they're the completely opposite end of this kind of risk spectrum. So it is.
That's where we're saying maybe the weak guys fall away. Because remember, everyone's trying to get the prize. Huge investment. I mean, there's just going to be some that are just going to fall by the wayside. And maybe that means there's not as much competition and the stronger get stronger. So you'll get the weaker fall away and maybe it all keeps going. And the investment keeps going, maybe at a smaller pace because there's less people vying for it, but that they actually can really succeed. So, maybe that, but I think there could be a stage of derating where everyone's like, we're really putting in a lot of heat into all these valuations and the bottlenecks with energy and, there's bad news to come, things not being able to get up and running as quickly as they want. And the revenue maybe not coming through as quickly. There's a lot of things that can go wrong. But ultimately, I think it's a bullish story long term. And this is the agentic AI. I'm very interested in how that's going to play out and how companies are actually going to use that, because I think that's when the margins go up, is when you're putting in that agentic AI and your workflows, like Salesforce, sacking half of their staff on customer facing and installing the AI agents, and they're taking up half of the contact with clients now. So all of a sudden you've just gotten rid of massive cost and your margin's just gone straight up. So that's going to happen, and it's going to happen in a widespread way, because companies are now spending a lot of time and effort working out what to do and how to go about it, and they've all been umming and ahhing because they've got so many people coming at them with ideas and whatever. But there's going to be a point where it's like time to go, and I think the agentic AI is the one that really makes sense. It's going to just really blast off. So that's in the next year or two, I think, is coming. So I'm still very bullish on that. But it's a different story to the use of AI versus the overinvestment in it and what can happen short term, which could be bearish, and the whole market might be in trouble because of that for a while. But that's a different story to AI itself. And people have got to separate those things out, I think.
Yeah, fair. Yeah, it's such an interesting point, because it's like we may see a giant bifurcation in the market when you have these hugely capital intensive companies that used to be very capital light software darlings going into a point where maybe they are selling subscriptions for many thousands of dollars for these agentic workers, also that larger companies can offload their lower tier workers it's going to be an interesting time of, as you say, like maybe high unemployment and very high margins for these companies.
And that's where the bifurcation of the market comes in, doesn't it?
Yeah.
Who are the AI winners? Who are the AI losers?
Who are the haves? Who are the have-nots?
And the AI winners are going to go bananas, and the AI losers are going to be really bad. And there's already a lot of companies that are getting sold off on the expectation that they're going to get disrupted. And maybe the market is wrong on some of those, and they're going to end up bouncing back, or they're right. And there are these massive disruptions going on, but also things like discretionary retail. If a whole lot of low-level middle class people are getting sacked en masse, your sales is going to be in trouble a bit.
It's about 66% of the US's GDP is through consumption from your average Joe, right? That's about 55% in Australia, a lot less because of our capital intensive mining. But if they're losing jobs, who's
who's paying their mortgage?
Yeah,
when they're so is there problems like that going to evolve? But also companies, their profits are going through the roof because their margins are just expanding massively because of the productivity hit they're getting. So are we going to enter that sort of a market? And if you get it wrong, you can get absolutely killed. It's not just going to be all boats rising. It's going to be these guys are getting killed and these guys are killing it. So you've really got to work out what's going to happen.
Yeah, or you end up with a Marie Antoinette kind of let them eat cake moment.
Yeah.
Anyway, there's enough philosophical musings about what this potential crazy future will be. Should we look at the ASX? Because that's been getting hammered as well. Something that the Oracle right here predicted many weeks ago, 3 weeks ago.
Yeah, well, hopefully this... for people who may be new and watching, and I've been saying, look, the false break of the February high is an important moment, and this is when momentum can really shift. And this is how markets work, is that they have these breakouts that get everyone bullish. And the market had already been rallying for months and months. So breaking out itself was happening after a big long rally, and it breaks out and everyone like, oh, it's away, breakouts are positive, and then it'll do that for a month or two, and then if the music stops and it fails back below the high, that's where I was saying, watch out for the false break, because people who don't understand it always get caught out by it, and amateurs are always buying here because it just looks so damn good when it breaks out, and professionals are usually being wary and or selling, and this is where I was saying that that momentum had waned, and this is where I was talking about the bearish divergence in the RSIs, where you're saying, okay, it's trying to rally, but the momentum is not looking too good here, and it's above this major high, just above it. That's where I'm like, well, if the momentum does shift here, it can all of a sudden turn pear-shaped pretty quick. And that's where we were following it along and saying, okay, we got the weekly sell pivot came in. Then I was saying, look, the weekly trend is on the edge of shifting. That was a couple of weeks ago. And look again, weekly trend shift, it can lead to really bad moves when the momentum really does kick down. So everything was sort of sizing up in that way. And that's why I was sort of saying last week, look, watch out here, because if it does crack, you're looking at a target back to the midpoint of the range. And this is where I'm talking about these things all the time. And now that you've watched it, you'll be able to watch this evolve. This is the correction that happened into April. So I'm sort of looking at that price action. And this is where I was saying, look, here's that wave. We've then had the rally and the breakout above. That's got to the level, 25% above it. That's where I said, look, watch out. That's where reversals can happen. It's now failed back inside the range. So it's now back inside the range. That now gives me a target pretty much to that point of control. So on this correction, it can easily get there. Maybe it gets above it. Maybe it takes a long time to get there. But that's just the theory of what's happening, is that it's tried to break away. The point of control is like a gravitational point almost. That's where most of the trading goes on. That's where most positions are. And so often it will retest that point of control before deciding what to do. And maybe it does that. But just technically for me, and why I've been warning for weeks here that, look, this is rolling over, is because of that whole setup and the way it was looking. So it's now done that, and it's on the way. And we saw that selling happening and the AI things going on and repo problems in the US, liquidity issues, and we've got the US yen and the Japanese bonds getting hammered.
Should we talk about the bonds? Because obviously with all of this kind of madness within the equities, we've seen a flight towards bond safety, right? We've seen that move in. But the Japanese bonds are doing something completely different.
Yeah. I mean, they're getting hammered.
Yeah.
The 30 years, the yield on those is going up and up and up. So there's a real crash going on. And you wonder who's getting hurt because it has gone so fast, so far. And it really is like a crash in the bond market over there.
For people that aren't as aware with bonds, because they're quite an arcane thing, it's like as the yields are climbing, the price is going down.
Yeah. Yes.
Yeah.
And when the yields, and if they're 30-year bonds,
so long
every
duration.
percent, long duration, every percent is quite a large move in the price.
Yeah.
And if you're going from near zero, every basis point is worth quite a lot as well.
Yeah, so maybe just zooming back a little bit for context for listeners, the Japanese kind of macroeconomic situation, central bank situation, has been vastly different to the rest of kind of the Western economies for decades now, right? Since their crash.
Since their crash.
Since their crash in the 89 crash.
Yeah.
And so their long-term bond yields have been functionally zero, if not below. Right?
There is the 30-year bond yield, right?
Yeah.
Can you imagine buying a bond for 30 years, holding it for 30 years, and you're given 0%?
0%.
All you get is your money back in 30 years.
And so,
does that make any sense?
As a consequence of this long-term bond, near 0%, Japan consequentially has been the major equity buyer of stocks around the world, especially US tech stocks, but also the ASX. ASX miners have got a lot of Japanese money floating around at them.
Yep.
And as we might see, as these long-term bond duration yields start climbing back up, is a kind of sucking sound around the world as Japanese capital flows back to Japan. Because Japanese investors, despite what we've seen with them investing overseas, they're very conservative. Right, their hedge funds, their institutions are extremely conservative, and so if they're going to get a handful of percent from a bond yield, they'll take it.
Yeah, this is what could lead to a bigger sell-off if we do see that repatriation of funds. And so this is the Japanese 30-year bond yield. I mean, it has gone. This is 2023 from 1% to its current level, 3.36%. And does that even look like it's stopping at the moment?
No.
Like it's actually just in the last month gone from 3% to 3.4%. So it's actually selling off quite dramatically at the moment. And look at that go. I mean, that was the yield back in 2007, right? So this is actually the drop in yields. That's, is this a change in cycle that we're seeing going on here?
This is a change in paradigm.
There is a total change in paradigm. And how many people have been caught with their pants down with these bonds, and mostly it's the Bank of Japan because everyone just offloaded the bonds to them, but also pension funds. And is there some huge Japanese pension fund that's about to blow up? I mean, I don't know, but this sort of thing going on here is looking pretty sketchy. And the thing I wanted to point out just quickly to finish off is the US yen. So I've actually done down here a little chart, that little indicator down the bottom here is looking at the US 30-year bond yield minus the Japanese 30-year bond yield. So you're looking at the shift. And what happens is currencies often move in relation to the shifting yield between two currencies.
Right, because when the interest rate is high, people want to flow the capital in there,
and you invest there, right? So and then that leads to the changing in currency. So what I want people to notice, and which is making me scratch my head at the moment, is here we've got, again, usually you have, when the yields are getting separated and US yields are high and Japanese yields are low, you've got the US yen going down. Here you can see again, it's rising, that relationship, rising there, here again. So you can see these big picture moves being related to the shift between yields, between the economies. Here we've got it again. There we go. There we go. Now this is what's happening here. Bang, Japanese yields are flying higher and US yields are going down. So we've got the difference between US and Japanese yields going down massively, which means the US yen should be going down and the yen should be strengthening. But look what it's doing. It's going the opposite direction. So this should really be going like that. And at the moment, the yen is collapsing. So the US dollar's getting stronger. And if we look back at, I can't even move that. I'm not allowed to move that. So sorry, it won't look as good. But this is going back years and years, the US yen. This was in 1998. Okay, this is like a collapse in the yen. When it's going in this direction is the yen collapsing and the US dollar strengthening, okay? And the last time they actually intervened, the Bank of Japan, was here, just at the start of the year or around the start of the year. They actually intervened to strengthen the yen because it was collapsing below where it was in 1998. And here we are again, getting very close. Now, what's happening there is people dumping the yen as well as they're dumping those bonds. It's a real sort of exodus out of the yen. Is it a case we're going to see that yen really collapse? I don't know, but with the market doing what it's doing, it's just interesting to note all of these things are going on, that Japanese bonds are getting absolutely creamed and the yen is also collapsing. It's like, well, what's actually going on here? Is there something else coming out soon that we don't know about?
Maybe it's signaling the change. They had recent leadership changes, political changes within Japan.
Yeah.
Looks like they're going to be doing deficit spending, which is something Japan rarely does. So maybe we're looking at just a new paradigm here. So it'd be interesting to see.
See how it goes.
Yeah. It's certainly something that people aren't talking about. So it's a good thing to highlight for people because this could become...
It could jump out at us pretty quickly if markets continue selling off.
But again, people trying to predict Japan and what's happening has often been called the widowmaker trade, right? So we'll have to see. But we'll leave it there. Thanks for your amazing insight and thanks everyone for watching.
All right. See you later.